All right, good morning, everyone. Let's get going here. Okay, Friday session, we closed at new all-time record highs. The bull market keeps going, keeps continuing to push higher, more or less in the face of danger, I would say. We've had, obviously, there's been a lot of new items that have kind of crept into the potential to affect the equity markets and financial markets worldwide for the last couple weeks. A lot of things on the horizon that could really make a big impact, and markets have just been able to shake it off. I mean, just really reminiscent of just a raging bull market. We had non-farm payrolls that came out on Friday, which were significantly softer than expectations. It's the first weak print we've seen on any real significant number in the States in a while. So I mean, it could be a bit of a once-off blip in the midst of what will continue to be a really strong economic data there, but we'll have to see how that plays out if the trend starts to get negative there. Markets took that as a positive. We were down significantly on the S&P futures at that point, and we really rallied hard from that level simply because we had the possibility of more stimulus, I guess. That's the only thing that I can think of. If we look at what happened in Asia overnight, sorry, the Asian charts and let up properly here. We had Hang Seng, which was actually more or less flat. Shanghai was actually up reasonably on the day. You can see there Australia down a bit and Nikkei up a scrap. So Chinese export and import numbers came out overnight, largest trade surplus on record. We had export numbers, which are doing really well. Obviously, exports to the States helping boost that numbers, but import numbers weaker than expected. So we're seeing the local economy there being obviously softer than what people have expected previously. We also had some numbers in Tokyo. GDP numbers came in a touch soft on the back of obviously the recent tax plan. So. All right, a couple charts of interest today. We're going to show two. This one, we've been talking about this. I must have mentioned this 20 times in the last 3 or 4 weeks. This is the difference in the economies out between the U.S. and of Europe. You can see here really the economic surprises that we've been getting, and they've been going to the upside there in the States, as you can see, very, very sharply, and they've turned very sharply to the downside in Europe, and that's really showing a major divergence at the moment. And I think that can probably only continue to go on for so long. Another interesting one here is a chart from Pension Partners. And this is showing the fewest percentage of bears since 1987, if you see here. So there's only 13.3% of the people left in markets at the moment are bearish. And you can see that we're pushing very, very extreme optimism levels. So I think that's just something to keep an eye on. I mean, obviously these things can last for a long period of time, but the complacency levels you can feel out there are incredible. I mean, with what we've got going on in Russia and the Ukraine at the moment, with what's happening with the Scottish independence vote, a lot of people are making some hectic calls if Scottish does secede. There's really just there's a huge level of complacency going on. So I think it's important to realize that. All right, we had ABI out with full year numbers this morning. Came in dead in line with what the guidance was on the trading statements. A little bit better on the revenue number and a little bit better on the divvy per share number. We also had Sasol out this morning, showing a touch maybe better than guidance, but probably a little bit less, only a touch less than certain expectations. Revenue number more or less coming in dead in line. Divvy coming in actually a touch light, maybe $1.50 light. So not so sure exactly what's going to happen there. And then that's not supposed to be DJ Group. I think that's supposed to be JD Group. We'll just fix that real quick. It's going to come out later today. We also have a spate of divvies out today. Huge day on divvies in the market. We've got BGA, 4 Rand, Nedbank, 4 Rand 60, Standard Bank, 2 Rand 59, ShopRite, 218, Exaro, 260, Goldfields, 20 cents, Trueworths, 169, and Woolworths, $1.50. It's a very, very heavy day on divvies. Don't get called on those in the open. We've told you, just don't screw that up. All right, this morning, like we said, we had Japanese and Chinese numbers. For some reason, the Chinese numbers aren't in here. We had current account balance numbers out of Japan, which came in a touch soft, as well as trade balance numbers, and the GDP number also maybe in line to a touch light. We had German trade balance numbers, which are actually better, as well as the current account balance. Funnily enough, after the German numbers turned really soft in the last month or two, the last 2 or 3 data points have come in a little bit better, so interesting to note that. And then we've got French Bank of France business sentiment a little bit later. All right, let's get into the maps. We're going to keep it light on the local stuff this morning. I will show a couple charts on the LSE as well to go along with it, but not a whole lot I wanted to really look at this morning locally. One of the things I do want to look at is Anglos, just because we've just been seeing the iron ore stocks get absolutely decimated of late. Anglos in this head and shoulder, we popped up above the neckline briefly, and you can see there we dropped it again in the head and shoulder. So we dropped it hard on Friday. You know, I think this is actually going to be a big level that we're going to have to watch for here. I'd peg that level right around 275. You can see for the neckline there. And if we can stay below that, then I think we can really potentially push even significantly lower from here. You can see Kumba, which is the biggest earnings generator, has been absolutely decimated over the past few sessions. Just have a quick look at Kumba and how badly it's been hurt. But you can see they're just getting absolutely vertical to the downside. You got to think that a big part of that's going to end up flowing through to Anglos, so maybe a little bit left to come in Anglos. All right, I'm just going to show CFR. I'm not even going to go back out to the big picture chart. I've shown that too many times. I just want to show it continues to kind of hang into this little bear flag pattern here and just cannot get up. I mean, our market rallies every freaking day, it seems like, and this thing cannot go. There's certain stocks that just can't go. You know, there's really something to pay attention to when you have such bull market and certain stocks are not only not going up, but they're actually coming lower. That's something to really take note of, because when markets do turn soft, it's not normally the stocks that have been the strongest that you need to look to short. It's the ones that have been the weakest. CFR has definitely been struggling. Like I said, I really think if this thing drops significantly at all from here, it's really going to get hammered. Just keep that in mind. Shoppies pays a divvy this morning, so I want to have a look at this. This is making a little bit of a bear flag as well, or a ascending triangle, something along those lines. Either way, we're probably going to drop out the bottom of that this morning. Watch to see if this thing can hold up, but the chart here is still looking a little bit bearish, maybe push back down to some lower levels. The last couple I wanted to show is SA Breweries in London. Sorry, we cut that off. You can see here after Thursday's push, we pushed right up to all-time highs, and I just wanted to show that because I just noticed it today. You know, this thing gets moving. It obviously moves in leaps and bounds, and you can see here it's just been drifting up since mid-August, and we really came up to touch the highs on Thursday session. 3460 is what we're going to be looking at. We need to get above that level, so watch that one closely. I think it can drag obviously it'll drag our local listing up if we do get that move higher in breweries in London. And the last one we're going to look at is Glencore in London as well, and you can see here it's been making a little ascending triangle, kind of narrowing wedge pattern, whatever you want to call this, and looking like it can possibly drop the bottom out here. It needs to get below about 364, call it, or 363 to be safe. I would say if it gets to 363, then you can probably sell this one. It'll be breaking it out like the rest of these iron ore players and these diversifieds that have been getting hammered of late. So watch that closely. This could be a laggard. There could be some meat left on the bone here in Glencore. And that's it for today, guys. Good luck out there.